This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe, episode 268. I'm Matteo Rizzi, the executive producer of the show. And today we are at our usual news from the fintech front that we could call summer edition. It's bloody hot in Europe. And my two amazing guests today are Ian Horne, head of content at Saxo Bank, and Sarah. Sarah, you and I are friends for a long time. I don't even which title you use. And both welcome for the first time to Breaking Banks Europe.
Hey, thanks, Matteo. Good to be here.
Thank you for having me.
Sarah, Ian, let's use the first couple of minutes to a few words about yourself. Sarah, you want to start?
Yeah, sure. Great. And I said, thank you very much for having me. So Sarah Kocianski, most recently, I was the CEO of Fintech Wales. Taking a bit of a time out over the summer, but for those who don't know me or haven't come across me before, I've been in the fintech space for a very long time. I calculated that it was probably over 15 years the other day, which is slightly terrifying. But my background has always been in fintech. I've worked for fintechs, I've been an analyst, and most recently, as I said, I was working for Fintech Wales. My expertise is understanding the fintech industry, understanding what's going on, what everybody's doing, where the opportunities are, and that's what I do. Whatever role I'm in, I'm helping companies understand where the gaps are and how they can make best of them.
Great. I already have a question that has nothing to do with the show, but the names is at the same time fascinating and scary. But we'll talk about it later. Ian, welcome.
Hey, good to be here, Matteo. I'm in good company with you and Sarah. I am formerly the head of content at Money 2020, which I think is where most people will know me from. So I was setting the agenda there for the Europe show. And prior to that, I worked for a company called Citywire, where I was a networker for wealth managers and financial advisors, and then launched the Wealth Tech Show podcast. And I also had a series of events there. So I've been in fintech for about 5 years. So compared to Sarah, I feel like a bit like a baby here. I can't touch 15, but I've definitely been around long enough to to not be a baby. Anyway, I now work for Saxo Bank, where I'm the head of content. One of the reasons I've gone there, I'm a writer as well, and I wrote a book called Why DeFi Matters about 2 years ago that was talking about the rise of Bitcoin and then blockchain and smart contracts in the financial system. From there, I obviously have a keen interest in this space, and the chance to tell the story of Saxo Bank came up, and it's a fascinating place. So I won't do the marketing pitch just yet, but that's what I do, and it's a cool job.
Amazing. It's great. It's great to have you both. So, talking about whales, there is the AI whale that is, every week, more or less, and there is like something new about it. I don't know if you have seen it, but it looks like, browsers are actually, there is a scary combination between AI and browsers. And some of the browsers seems to be collecting like a sensitive data. So it's all over like the privacy story again. And, whatever LLM you're using seems to be, harmful for our identity. You have a take on this?
I mean, okay, yeah, I can get us started. I feel like data privacy is dead, right? We all know that to use everything online to access things we want to access, we're kind of all giving up our data and letting people track what we do. It's almost like an open secret, and it's something we don't really talk about. So I think what's going on now with AI browsing is particularly interesting, because obviously we're seeing, you Google search something now and you don't just get the list of things you were looking for, you actually get the AI suggestion too. So, I mean, I don't even know which touch point we jump into on this conversation point. I mean, privacy is the thing I would say is most interesting to me, because I wonder if that becomes a selling point further down the line. It's this argument, we're kind of between, do we want a hyper-personalized ad-based web, or do we just not want to be tracked? I would say the initial kind of indicators suggest we're going hyper personalized, but I mean, there's loads of suggestions that we might not as well, and the rise of VPNs and other browsers. But I mean, that's my initial take. I think this is very interesting. The internet is undoubtedly has changed dramatically in the past year alone. But we're very it's a very nascent stage with the AI powered web, and I'm fascinated to see where it goes.
Sarah, what do you think? Do you even care?
Well, I'm one of those people who cares greatly, actually. So I think it's an obvious next step for browsers. Like, I don't think anybody didn't see this happening, whether it was going to be, Perplexity or OpenAI, or whether it was just going to be Google. I mean, I don't think it surprises anybody that this is the point we're at. I am one of those people who's very, very cautious around LLMs. I've also, played with quite a few of them, and I can see there are some uses for it, but I think the problem is a lot of people are using them, playing with them, and there's two problems for me. One is data privacy. I think people don't know where that information goes. I mean, the article I was reading, which your producer sent over, Matteo, was saying that people are using these, agentic browsers, and then going on to like their doctor's surgeries, and the browser is recording everything that is, they're communicating to their doctor. Now, your medical records will go in and be anonymized, and but what if they're not? What if they come up, and what if that is then used against you? And what if this personalization piece, actually somebody can then find out that you have this health condition, and therefore they're not going to employ you, or they're not going to insure you, or whatever it might be. And so I think the biggest issue on the privacy side is I think a lot of people don't know what they're doing. I think a lot of people don't fully understand LLMs. They see them as this great tool to help them do whatever it is they're doing, but they don't fully understand what's going on in the background. And you can argue that most people don't fully understand what's going on with privacy and cookies. I'm the person who always clicks decline cookies, by the way. I'm that person. So I think that there's got to be, I don't think this is going to be a regulation will solve this problem. There's no way it would keep up. There's no way that any regulator would understand it fully, properly. I'd refer you back to the cookies button, which just drives everybody mad, and nobody fully understands what it's there for in the first place. But I do think perhaps as these browsers become more and more commonplace, which I have no doubt that they will, we need to do a better job. And in fact, the people who are making them need to do a better job of explaining to people where that information is going and how to turn it off. So in ChatGPT and in Perplexity, you can turn off whether it records your information or where it sends it. But that's 3 buttons deep behind a menu that you have to sign in to get to. That's
Actually, talking about browsers, you're right. I mean, they've been there since internet is born, and it looks like an everyday tool, like the TV, right? So it's difficult to think about how a TV can innovate. At the same time, there is a lot of room in a tool that we use probably every single day of our lives for different reasons to be like upgraded and as well as sort of expanded in the scope. And one of them, I read this article about like Klarna that is sort of working on Chrome's browser to like re-enter the payment data so that officially browsers could become giant shopping mall, right? So you which is already the case today, right? Even if you do basic Google search, and yesterday I looked for like my next squash racket, which I didn't know if it exists or not, the new model, blah blah, or they immediately prompt, hey, you want to buy it? Well, fair enough. I was in Italy. My should have been delivered in Portugal, and the shopper was in Germany, so it wasn't like that specific yet. But I could have been both there and there, maybe it cost twice the price. So, and it's going to be like, I'm sure it's going to be refined. Do you think that there is an evolution of shopping experience that, browser will be involved in? I mean, the answer is obviously yes, but at which step of the journey are we in Europe?
So, well, I can start just on Klarna. I mean, because I'm in the middle of writing an article about BNPL and about Klarna's, because they say they're going to IPO in September now. They've finally gotten over the Trump's antics. Though no doubt he'll do something else, which will affect the markets wildly in the next 2 days anyway. I think Klarna is really interesting because it started off digitalizing something that's existed for hundreds of years, right? Installment payment is not a new thing. It took a while for the digital versions to take off. And it's really interesting. About 7 or 8 years ago, I was in New Zealand for work and talking to various people just, on the project, and everybody there used was called Lay-by, but which has since been bought. But everybody there was using it, and I was like, I have never heard of this. I work in fintech. I have never really come up. It's not widespread. Fast forward to today, and people just use Klarna. I think what's really interesting is that Klarna you don't need to use a browser anymore. You use the Klarna app. It's like it's gone from being a payment mechanism to being a shopping experience. So if you go into the Klarna app, it will recommend things for you. It'll, to tell you where your favorite shops have got sales on. It'll present you with offers you can't get elsewhere. Oh yeah, and by the way, you can pay with it. So we think what Klarna's done is go from, and I think the other thing that people forget is Klarna is a bank. It's a licensed bank. So some of the products and services it's offering are moving fully into full financial services. And actually recently, it got further approval in the UK to offer even more financial products and services. So I think, I almost think the browser bit is unnecessary to a certain extent because Klarna's already got you captured. Klarna's already got you, and you don't necessarily use the app, you can do it on their website. The point is the same. If you're Klarna obsessed and you use Klarna, you don't need it to be there in Google because you're going through Klarna anyway. You're not doing what you just described, Matteo. You're not going through Google to look for the squash racket. You're going through Klarna to look for the squash racket. I suspect there's a certain amount of, they're thinking they can pick up new customers this way, if we have the autofill. But the article that we were reading suggested that what it is when you go to pay on Google, you go your Google wallet and it says you want to pay with this card, you want to pay with this card, you want to pay with Klarna. Again, you already have to be using Klarna. So I think it's an interesting, almost a distraction from the world and the empire that Klarna has built. That said, and I've said this before, and I said this on a different podcast, if you're going to IPO, it's really good if everybody knows who you are and what you're doing. So just dropping some bits of news here and there to keep yourselves in the headlines, not a bad idea.
Oh, I totally agree. This is a kind of tweak on the conversion funnel, isn't it? I mean, something like Google autofill, the point is that maybe they're losing a small number of customers that actually have a second think while they're buying something, or they get taken out of the browser and then all of a sudden they don't make the purchase. This possibly makes them a small amount of revenue. And as Sarah rightly says, I think it is very much a let's be in the news play. I think I guess there's always been this conversation with buy now, pay later around what's the correct amount of friction. I think if you go back to that conversation, like you were saying 5 or 6 years ago, people maybe looked at it and said, this is too easy. Like, why are people able to buy things if they're taking on debt? I mean, another article that you shared with us before the podcast, I noticed something really interesting about a firm referring to themselves as a pay over time company rather than buy now, pay later. Mm-hmm. It does make me think that these companies, I don't buy that, to be honest. I don't enjoy that. It's a BNPL. But I do think there is a kind of perception change that's needed. And I'm also not saying that BNPL is a terrible thing either. People use it for perfectly legitimate
it seems like almost like BNPN, buy now, pay never, that.
Yeah, well, exactly. And I think that, so something like this, the more interesting conversation is likely around, as you were both discussing, the addition of AI and kind of suggestions in the whole purchasing experience. And to go back to what you were saying earlier about the AI internet, it actually does give these browsers incredible power over our spending patterns, and it could lead to incredible commercial biases. Is an AI going to recommend the same product every time? And if it doesn't, what's the reason it won't? Does it have to then do it for as an obligatory thing? Does it have to recommend something different just so it doesn't create a monopoly? I think there are some really, really interesting things here. You could even have a situation where a certain product or a certain thing ends up getting ridiculously excessive demand that it can't meet because AI recommends everyone to the same thing. So I think there are lots of ways this could get interesting and get a bit spiky and perhaps a bit wrong. On the other hand, there is this idea of the lovely, this knows exactly what I want to buy. It gets all of my tastes correct. It knows me. But then it goes back to the privacy question. Is that a good thing? Or is there a way, you hear talk about things like zero knowledge, proof and things like that. Are there ways that we can have things access our data without us giving them the data? But that is a whole other conversation.
So from news number 2 to news number 3, passing through football. So Tether just bought 10% of the Juventus club, which is the most prestigious, or one of the most prestigious, football club in Italy. And it is undisclosed how much they paid, but Juventus is listed in the stock market, so the transaction is pretty public, and they have funded Tether alone 3 African startups for stablecoin payments. And just this month alone, Transact and Zodiac, respectively, 16 and 18 something $million, that were totally Series A, right? And this, stable coin sort of in the back transaction reconverted it in fiat, it's clearly, one of the biggest trends right now. Maybe I'll start with you, Ian, because I know is a close to your heart and also sort of skills topics. I work a lot in Africa, and it seems to be certainly for remittances a very smart solution. I don't know how much regulation there is, to be done yet for this become truly ubiquitous. Super interesting topic, fascinating.
Definitely. I mean, we featured it really heavily at Money 2020 this past year. My colleague, Mickey Tesfaye, former colleague, said it was the hot stablecoin summer, which I quite enjoyed. I think there's lots of sessions as well saying how every bank now needs a stablecoin strategy. And I think that's what these investments kind of highlight. Because as you say, remittance payments are a great way to acquire or lose a customer. Same with business payments. If there's an alternative where I can move money and send money cross-border immediately and cheaply, that is a huge value add. And if my bank doesn't do that, I might go somewhere else. So I'm not surprised to see all this money flying in. I mean, the companies you mentioned there, I mean, Transact, I mean, Zodia Markets, I obviously think Standard Chartered. Everyone is doing it. So I'm not surprised at the buzzy space. And regardless of what happens, on the rails or off the rails or whatever, what matters to the customer is that the money moves quickly and cheaply and effectively and in a regulated manner. And it can. I mean, these are global systems. I mean, stable coins are very much global infrastructure, and that hasn't really existed previously in the same way. There's loads of other things that are similar. I mean, there's universal money addresses, there's Interledger's protocol. They claim to make money sending as easy as an email. And I actually think this is the kind of thing where in every aspect of our online lives and daily lives, we get used to convenience. The fact that the payment system is kind of antiquated and needs to be explained to people is confusing the people outside of our industry. So I just think this is a necessary upgrade. I think in time, I mean, as you know, I've written about this. I think, immediacy and global infrastructure for money movement will extend to assets eventually too, when we look at investments and things like that. This is huge. I mean, this is obviously a game-changing thing for the whole industry. So I'm not surprised to see money flying in there. You mentioned Tether's sponsorship. I think that's just an interesting one because obviously there's a lot of regulatory scrutiny and pressure around Tether, which I won't go into, but can't harm them to have a major stake in one of Italy's biggest football clubs, can it? And then they're investing in interesting things, and they're adding a lot of utility to the financial ecosystem too. So.
Sarah, because before you step in, I think that the role of the banks, which is pretty interesting, it's very complementary to the rails part, because the big challenges for these stable coins, let's say rails companies, is the liquidity, right? So this is where banks could play a role. So because if you want make a stable coin go from point A from point B anywhere in the world is very easy. What's complicated is, okay, how do you can't use USDT to buy bread in Nairobi, right? So you need to somehow cash out that money somewhere. And the way they do it today is pretty much, I want to say, handheld. So they asked you, Ian, hey, Ian, do you want to give like a couple of bucks in a pool? We give you 10% a month or something, as a yield. You put your 100K so that we can give that $100 to that families that uses stablecoin to receive money from Dubai, for example. But that's actually not really sustainable, because if you're talking about big volumes, you need 100,000 yens, to give $100,000 to make sustainable. That's where bank could play a role. I don't know, Sarah, if you actually, whether you're familiar with it or not, but how do you see this evolving?
Yeah, for a minute, I thought you were going to ask me about football, and I was like, well, I'll have nothing to say on football. Stable coins I know a bit more about. I think it's very much an infrastructure play. I think everybody knows, and the title of this podcast, for goodness sake, that the financial services system is old and it's creaking. and we need to do something about it to make it fit for the modern world, which is probably why the banks are interested. I think there's also this point that people have started to get their heads around, and those people in banks who go, oh, crypto, no, illegal, Bitcoin crashes, Trump coin, we're not doing that. They've managed to sort of separate, which a lot of those in the industry have been able to do for a long time, the difference between kind of your crypto meme coins, which people are playing with on kind of, trading apps, to the stable coins and what the potential is for the impact on the underlying infrastructure. I think that is why the banks are starting to pay attention to it, because they know that they're falling behind. And I think there is a certain amount of, whilst there's a certain amount of still arrogance in the banks that says nobody's ever going to come in and replace us, I think forward-thinking people in some of the larger banks, and certainly in certain parts of the world, are going, actually, we need to be involved in this, or we will get left behind, and then will be defunct. If they build a new infrastructure that doesn't involve us, if they no longer need us to do that liquidity, particularly if you're looking at large sums of, if you're looking at capital markets, if, all of a sudden those huge, finance houses are no longer necessary because it's all can be done on this new infrastructure that's been built over the top of them, round the side of them, underneath them, then they're going to panic. So I think that's probably why you're starting to see some of the banks' names appearing in these funding rounds. And what I would really love to see, though, and I've said this for years when I've been sort of writing and dipping my toe in journalism, is people send me a press release that says such and such a bank has invested in such and such a stable coin, or they've done a tokenized asset, or they've done something on the blockchain, and then you never hear anything else about it. And I think what we need to do is for the organizations that are doing it to be, wherever possible, shout about it louder so people can understand it better. The more it's understood, the more likely people are going to get in on it. But I think exactly the point that's been made is that banks and all financial services companies actually need to have a strategy for what they're going to do. And it doesn't have to be with stablecoins. They need to have an infrastructure strategy. You cannot still be telling people it's going to take 7 days to clear their payment. That's not a thing that you can tell people. And it's bad enough when you're telling, Ian that he can't clear his, it's going to take him 7 days to clear that 100 quid he sent to whatever. But if you're telling a large financial services organization or one of your huge corporate customers, sorry, that £2 million transaction is going to take 7 days to clear, those customers are going to be like, no, it's not good enough. So whatever your strategy is, whether it's stable coins, whether it's, some other form of infrastructure play, you have to be thinking about it now.
Yeah, I mean, I've got to jump in on that because you mentioned press releases, and I've received far too many of those in my career. I think one thing that I'm used to seeing, like you say, it's like, oh, we've done some digital assets, or we've tokenized. People like they kind of lead with the technology, like I'm supposed to be interested in that, and I might be because I'm a fintech nerd. But you go beyond that, does the end user care? And no, it's like, why have you tokenized it? What are you actually doing? And I think there's definitely an improvement in messaging that's needed. But the other thing I think to look at with the rise of stablecoins, or the money flooding in, is what it means to international currency. I don't claim to have the answers here, but when you speak to people about this, people often say, well, how many currencies can legitimately be made into a stable coin that you'll have enough kind of, let's say dollar reserves and treasury funds to back with? You could end up with maybe 7 or 8 currencies across the world that are, large enough to sustain this. But then, you look at things like Bitcoin and digital assets, as Sarah raises. Well, in other parts of the world, let's say, there's not going to be a stable coin there, but they're going to benefit from immediate money movement. Perhaps that's where digital assets has a real foothold there. I know for Bitcoin in particular, there's a massive market in Asia, but also Latin America too. You think of economies with hyperinflation and things like that, where you might move your money to a different store of asset. Yes, you might dollarize also. But I think the rise of stable coins could cause much bigger shift to the international system, and we'll see investments and business decisions around that, I'm sure.
Absolutely. Ian, you mentioned that people called the latest one in 2020 the stable coin one in 2020. I think that I could bet with a good amount of certainty that one of the next one will be the agentic one in 2020, because that seems to be the new trendy words associated to AI. And actually, on this one, on the news, I wanna comment, which is the fact that this a super agent AI, this company in San Francisco, they say they will launch the first, completely run by AI insurance broker. Which funny enough, I invested in a startup called 6022, a French startup. They are live since 3 months already with a fully insurance broker, French-based, to a point that almost the legal framework couldn't cope, because it's actually illegal in France today to run an insurance broker that has no employees. And so there is an adaptation time which is super interesting to watch. But the news here is that AI seems to take over in the different industry bit by bit. And in the insurance one, it's pretty interesting because there is a lot of customer interaction, and probably 80% of the customer interaction is a history that you can reproduce that has happened before. And the interesting thing about making the agents collaborate with a little hint of this human touch that sort of intervenes whenever agents can't, find the right answer. I've seen it working, right? I don't think that the whole framework around it is just ready yet. And it's funny because whatever is made in the US seems, if it hasn't been done in the US, it seems not to exist. But for once, I believe that France has done it before. Google 6022.io is super interesting. But what do you think of this agentic trends?
Well, I think agentic insurance brokers is something that people they've been working on for a while. I think what's really interesting whenever you talk about insurance and how to sell insurance are huge cultural differences. So in the United Kingdom, it's very unusual for people to go to a broker for most types of insurance. They go to a comparison website, or they buy it as part of an embedded process. So, or you buy whatever it is, your shiny new TV, and it comes with insurance. It's basically a warranty, but or you buy it that way. So I think the agentic piece is really interesting because I think where it takes off where it takes off will depend on the cultural intricacies of the insurance industry there. So I could see it taking off perhaps in the UK before it takes off in other parts of Europe, for example, in Germany, where almost all insurance is bought through a broker, individual insurance. I mean, I know that business insurance is something different. So in the UK, we're used to not interacting with a human when we buy insurance. And actually, a lot of us don't like to interact with a human when we're buying insurance. It's really interesting. If you look at the surveys, British people are like, no, just do it, sort it, tick the box as quick as possible. Of course, there are problems with that. And the biggest problem, which the comparison websites have, but I think this links to the agentic piece as well, and hopefully the agentic piece can help, but it's not there yet, is people being missold insurance. And I don't mean being sold, like the PPI scandal. I mean being sold a health cover that isn't appropriate to them. So when they then need it, it doesn't work. So, if it's because your TV is broken, then the insurance is the wrong insurance. Well, you've lost your TV. But if we're talking about health insurance, if we're talking about life insurance, if we're talking about travel insurance, and you are sold a policy that is not appropriate for you, if you haven't spoken to a person who's done it, who's responsible for that? So I think there's kind of going to be questions with the agentic piece about black box decision making. So what are you recommending? Why are you recommending it? Where's that decision come from? How do you make sure it's appropriate? So I think it's interesting. I think it's been coming for a long time. I think I've known people working on products like this for a long time across the insurance companies that I work with. I think, again, it's going to happen. I think this is one where the regulators might step in, as you say, they have in France, and go, somebody has to be held accountable, because if somebody can't get the treatment they need to save their life because you've missold them a health insurance policy, that's a problem. So I think there's definite uses for it. I think it's coming whether we like it or not, but I think it is one that might be slowed down with a regulatory piece. And I think it's really interesting where you see these waves with AI, and a lot of people who talk about AI, I don't think fully understand that AI is not a thing. It's many, many, many different things and many, many different sorts of technology. And you ask somebody on the street right now if they've heard of AI, and they'll say yes, and they will almost certainly just say it's an LLM. They'll have no idea about machine learning or anything else, robotic process automation that happens. So I think to sort of circle back to where we were with the agentic AI, I think people are running headlong into playing with the new shiny thing. And I almost certainly think we'll see them go, oh, hang on, and pull back a bit, as they realize that there are kind of ethical problems, customer problems that are going to come out of the woodwork. And the last thing you want to be doing as an insurance company is be told, be fined because you're selling people the wrong product or a bad product. Like, it's not going to look good, no matter how shiny your agent is. So I think that's my big concern with it. I think it's coming. I think it's going to happen. I think it's going to help, but there's got to be something in there to make sure that all this personalization is actually accurate and appropriate. Because if you recommended the wrong squash racket, it's annoying, Matteo, but it's not the end of the world. If you recommend the wrong life insurance, it's a very different conversation.
Yeah, and actually, if you're gonna be recommended an insurance product based on your browsing activity, chances are something bad's just happened, or someone's detected that something bad is about to happen, which means that the rates you're being offered probably aren't be particularly favorable. I think the point of sale is actually the point where you meet the insurance product is an interesting thing, because there's misrepresentation, there could be missold things, but there's also underselling of certain products. Certainly in the life insurance and employee kind of future earnings space, some of these products used to be commission based, so people had more incentive to sell them in the UK. And when those rules kind of changed, all of a sudden there was less incentive, less people get important insurance should they have a debilitating injury, or should they die early, or all that kind of stuff. So there is potentially an angle to look at it the other way, which is which types of insurance aren't being sold effectively enough, where we can actually use AI to target the people who need it the most, or people who might benefit from it the most, and meet them in the right place. But I think Sarah, you raise a good point about the embedded finance piece. I mean, I'm most likely to buy insurance. Maybe I'm not going to go out my way and buy travel insurance, even though I travel a lot. But if I'm about to book a holiday and I get a tick box saying, do you want travel insurance? Maybe that's the point where I do that. So yeah, I mean, AI. It's AI in the agentic space again, and insurance, I think, is just an exciting market for it, especially when you add in like the Internet of Things, the quality of data that's available now on everyone and everything that we do. Again, back to the privacy piece. What if it finds out things it's not supposed to find out, or stuff you didn't want to share? Great news for the insurance provider, perhaps, but maybe not great for the end user.
I think there's just one other point you made there, just about insurance. And when you engage with insurance, it's usually something bad has happened. So do you want to talk to a bot, or do you want to talk to a person with empathy? I think there's another piece there, because claims, we've been automating claims for years and years and years. And sometimes sometimes that is what you want. If it's like a car, you're like, I just want to file it and I want to get the money back. But if it is one of the more personal, harder hitting, if you're having to claim on because somebody you love has died, then do you want to do that through a bot, or actually do you want to pick up the phone and speak to somebody who understands? I think that's just another element. I don't think it makes agentic AI right or wrong, but I do think you have the question about where is the process? Which agent is the AI replacing? And is it just because they're better at the job, or do you actually need a human element in there as well?
Okay, guys, so we are getting towards wrapping up. I don't know if there is something that we have not been discussed, but you came across in whatever shape or form that you want to share. I'll just do a quick. For me, is this something that wasn't sort of prepared, but it is something that is very close to my heart, and is how the Africa investment plan has been redesigned due to the fact that a lot of funding has been cut, from the US. And at the end of the day, we are in Breaking Banks Europe. But the reason why I'm mentioning this in a Breaking Banks Europe context is that I wonder whether or not Europe, that has all these, GIZ in Germany, Luxembourg for financing Luxembourg. There is an Italian program on purpose funding Africa, l'Agence Française de Développement, that is, investing in Francophone. So because this sort of cutting from the US funding in Africa coincides with probably the fastest, pace of development of the continent. So I wonder whether or not this is an opportunity for Europe to step up, and I think they will.
Yeah, I mean, potentially, I'm going to speak in really broad brushstrokes here, but yeah, the African economy is growing at great speed, and yes, it's diverse. It's not all, it's kind of, it's not homogenous, right? I think China has obviously probably led the way in investing in Africa and getting growth from that, and I think that, yeah, for sure, there is a big opportunity to invest in African companies, especially as the global infrastructure, the infrastructure is becoming more global in finance. So, yeah, I don't know quite specifically how it links to US aid, but definitely, this is a hugely growing market, and we're going.
Well, I think that what I was saying, Ian, is that the African states, especially from this market, are going to look and offer good deals elsewhere. Because without capital, they can't develop. And someone will need to step in. China, you're right, is they are already super present, but it might be an opportunity to for like a European aid to fuel up. they just discovered something like a 12 trillion gold mine in Uganda, and that needs capital to, you see this type of, and there are going to be plenty of this type of development in the continent. I think we're going to see interesting news coming from there.
Yeah, no, I mean, I think it's interesting you mentioned as well, the French agencies. I think some of the links that European countries have with certain countries in Africa are historically not good links, but they do mean that there are links, certainly, and that means that there are often similarities in language, but also in kind of legal frameworks and things because of, poor behavior by European countries in the past. But perhaps there's the way that those countries can capitalize on those links and go back in, and it's an opportunity for both sides, right? It's an opportunity for the country receiving the investment. It's also an opportunity for the country making the investment. I think that people are finally waking up to the fact that Africa is a continent, not a country, and there are many, many different, differences between all of those countries, whether they're cultural, but also kind of to do with business, to do with their strengths. Some of the fintech that comes out of Nigeria is mind blowing. European people have never even considered some of this stuff, and they are huge, huge companies. Back in the first one that ever caught, this is giving my age now, but the first one that ever caught my eye was M-Pesa. I was like, sorry, they've done what? Whilst we were just looking the other way. So I think, huge opportunities, and I think the world is waking up to it. I do worry, just generally speaking, I worry about the state of the world generally, but, to make it more relevant to this conversation, it's not just the US cutting back. Lots and lots of countries are cutting back to try and focus on what's happening within their own borders. And I do, wonder what impact that will have broadly on general development, global economic development. And I think to your point about this sort of ties it back up, but to things we've seen this week or things we've seen recently that kind of we haven't perhaps come up. It's linked to the Klarna piece, but Zilch, which is a UK buy now, pay later company, just revealed astounding results, like, 153% growth in some areas. Why are people turning to buy now, pay later? Is that to do with the state of the economy? Is that to do with the fact they can't afford to pay in other ways? So I'm trying, a little bit tenuous, but trying to link it to your question of what have you seen recently that's interesting we haven't touched on, and trying to take it back to the earlier Klarna story. I think the buy now, pay later companies are doing really well. I'm going to do some digging on this in my next research project, but I would like to know if that's linked to broader socioeconomic factors and not just the fact that they're actually very, very good businesses with brilliant products and services that, are flying out the door. I
mean, it definitely is that. If you want to hear a millennial guy rant about the gradual decline of Western economies, I'm right here. And I could give you 3 hours on that, and I'm sure Gen Zs will be listening to that and be like, what the hell? You think you've got it bad, it's even worse for us. So, yeah, I mean, how we look at the Africa thing, you're right. Europe and the UK have a poor reputation for striking relatively unfair deals over many years. So I think the way to look at it is as an opportunity, but to do things in a far more mutually beneficial way, to offer better terms, and to see it as a massive growing market. It was a number of markets as well. And yeah, as you say, looking at the UK, it's not necessarily all going great here, is it? If you look at the average salaries relative to inflation, and I feel like we work in finance. Most of us probably listening to this podcast are doing okay. But even then I walk around the supermarket and I see the prices of things and I'm like pulling faces. Almost...
When did coffee get so expensive?
Exactly. Yeah. I honestly, it's absolutely shocking. So yeah, I think there's a bigger piece. I'm in a way, I'm not surprised that Zilch have published crazy high numbers, and I don't expect that to stop anytime soon.
Sarah, Ian, thank you very much for this very funny, entertaining, I want to say, not funny, entertaining episode. Thank you very much for being with us. And before I give the magical words to end up the episode, I want to thank you for being with Breaking Banks Europe, this episode 268. Ian, thank you.
Thank you, Matteo.
Sarah, thank you.
Thank you very much for having me.
And guys, this is a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.